Hello, everyone, and welcome to Financial Accounting. Today, we're going to take a closer look at owners, shareholders, stockholders, and stakeholders. When we study the accounting equation, I often get this question: what is the difference between owner's equity and shareholder's equity? Let's first take a look at the term equity. The term equity means something of value. It can also mean ownership. Usually, when looking at equity, you want to consider the value of something and how much you owe. The difference is equity. The accounting equation represents the relationship between the assets, liabilities, and owner's equity of a business. And the accounting equation is assets equal liabilities plus owner's equity. And in other words, owner's equity is equal to assets minus liabilities. What is the difference between an owner and a shareholder? When you are talking about a corporation, the terms shareholder's equity and owner's equity mean the same. However, you will only see the term shareholder's equity on the corporation's balance sheet. If you are referencing a sole proprietorship, the appropriate term is owner's equity, as there are no shareholders. A one-person ownership of a corporation should also be listed as shareholder's equity, since the person owns 100% of the stock. When you talk about owners and shareholders' equities, the terms are slightly different. Owner's equity is increased by contributions and decreased by owner's draws, while shareholders' equity is increased by investments and decreased by dividends. You might also see the term stockholder. What is the difference between a stockholder and a shareholder? Both terms mean the same, and you can use either one when referring to company ownership. Both stockholder and shareholder are the owner of shares in a company, which means that they are usually part owners of a business. Stockholder means the holder of stock, which can be interpreted as inventory rather than shares. On the other hand, shareholder means the holder of a share, which can only mean an equity share in a business. If you want to be precise, shareholder may be the more technically accurate term, since it only refers to company ownership. However, in more recent years, most private corporations simply track who owns what number of shares. You may be the sole shareholder or one of thousands. In the United States, there are generally no restrictions on who can be a shareholder. A shareholder can be an individual, a partnership, an LLC, or another corporation, a US citizen, or a foreigner. Shareholders may also be referred as investors. For example, investing in Apple makes you both an investor and a shareholder. But the terms investor and shareholder refer to different relationships. A shareholder can be anyone who invests in a corporation that issues shares, either in a private or public company. On the other hand, an investor is anyone who takes an ownership interest in any type of venture, whether it is a corporation or other business structure. Stakeholder is a broader term than a shareholder or stockholder. A stakeholder is a person or entity with an interest in the economic performance and well-being of a company. Business stakeholders can come from several areas and can be generally classified into one of four categories: capital market stakeholders, product or service market stakeholders, government stakeholders, and internal stakeholders. Capital market stakeholders offer financing for a company to start up, expand, or continue business. Banks and creditors expect to recover the original amount loaned to the company plus interest. Stockholders want to maximize the value of their investment in a business. Product or service market stakeholders purchase the company's products and services or sell their products and services to the company. Customers have a stake in the continued health of the company to be confident they will receive their product or service. Similarly, suppliers have financial interest in the company. Suppliers expect to be paid for goods or services they provide to the company. Government stakeholders can be federal, state, county, city, or other regulatory bodies. The more successful a company, the more it will pay in taxes. Finally, internal stakeholders include managers and employees who depend on the continued success of a company to remain employed. Thanks for watching this video. Don't forget to like and subscribe. More videos are coming soon.